A coup in Libya, the rally rolls on, and the Virginia Cavaliers steal one. What's up, everybody? Welcome aboard Bubba's Bottom Line. Always great to spend a Sunday with you and talk a little about what's happened in the last week and what we're looking for going forward. And of course, I don't know if there's any bigger story right now than the NCAAs and the two final games last night. And of course, the Virginia Cavaliers stole one, got away with a double dribble, and are in the national championship game. Now, it was a great game. I can't take anything away from the game, but you would think with today's technology, it'd be hard to miss a double dribble. But there you have it. There's another human error that takes another team out of the national championship game, puts another one in, very similar to what happened again in the Rams and the New Orleans Saints during the football season. But there you have it. That's it. It's a final score, and they're playing for the championship as a favorite going into Monday night. And of course, late Friday, you could kind of see this happening. You had something was going on with oil, and volume was drying up. And during the week, what we saw in crude oil was what we would call backwardation, which means simply that the front month oil, or in this case, May oil, is getting to be more expensive than oil 6 months from now, which is not the proper formation. So you knew there was some news going on. And typically, this is a bearish formation once it settles, because what it's telling you is the markets are being driven by fear and by nothing else. And of course, as happens, Friday comes out and there's some issues going on in Libya, which is an oil supplier, spiking the prices of oil on extremely thin volume. So we would now be ready to say, okay, that oil is becoming near the top of this range after we've taken our beating way back when, and now we'll be looking for another place to enter from the short side, because of course, typically this coup, like many others, will be put down, okay, and it'll get taken care of and it'll resolve itself. In the meantime, that does not solve the issue of the oversupply and lack of real demand, which is something interesting to look at overall. But yet, here we are, the markets rally on. We had our jobs number on Friday, and jobs were okay. Again, they're improving, they're getting better, but again, we still have there are some underlying weaknesses within these markets from a data standpoint. But again, why would we want to fight what's going on? And we'll talk a little bit more when we talk about markets. But again, we say we've been long since the beginning of the year. We will continue to be long, because at this point, nothing has really changed to make us think the markets are going to go lower. We are a firm believer that you're going to see a run at the all-time new highs. But the big news of last week, I think, will start with the overall the White House. Again, we kind of touched on this last week, and the White House and the Fed and trying to get interest rates down. And now, of course, we see Herman Cain and Steve Moore as potential nominees from President Trump, and I like both of them. Okay, but again, I think this begs the question: do we need a partisan Fed? Okay, and of course, the Fed will be part of our commentary today. But again, do we need a partisan Fed? And I think you're opening up a can of worms of an already broken down operation. So I think that, again, there's a few things that we see that happen in this country, and again, it's all great when you're in power, but when the other party comes into power, obviously we have issues, and everybody tries to get the partisan edge, which is not supposed to be what it's all about. Okay, I think this is one of the big things that we seem to forget, is that everything is meant to be somewhat even down the middle of the road. Okay, and a little bit left leaning on certain things, a little bit right leaning on other things. At the end of the day, really it should be just libertarianism, and that would be it. We wouldn't have to worry about it. But of course, we see the constant political battle of those who want to continue to control our lives and take away, which is truly the only true moral economic system, is the system of capitalism. Okay, at the end of the day, okay, where else can you start a business? In a garage, in your living room, anywhere, and become a very wealthy individual. Okay, look at Jeff Bezos, who just settled his divorce, and everybody's going, "Oh my God, I can't believe he settled. I can't believe she settled. She could have gotten half." You know what? She got $36 billion. Okay, is it worth going to war because a lot of his or most of his money is tied up in his stock? Is it worth going to war to create this stock to potentially crater? And I'm not going to say get nothing, but get significantly less. She's now the third richest woman in the world. She still owns her stock. Obviously, it was somewhat amicable, either from a friendly standpoint or a financial standpoint. But at the end of the day, Amazon investors have to be happy. Certainly, she can't be that unhappy to have $36 billion. And obviously, he's happy. So I think, of course, we have to continue to try to make an ordeal out of it about how she could have gotten more and she could have gone after him. End of the day, they settled it. They did it. And I think in good form is they did it for the best interest, probably, of the overall company. Okay. Again, nobody got hurt here. Nobody's going to miss a meal. And what's the best about it is the lawyers aren't going to get rich trying to work this settlement over and over again. I think that's one of the bigger things to look at because, again, in this country, the lawyers end up getting the money anyways. So isn't it better that we just had a straight out settlement, which didn't take very long, and it's done? Okay. Again, I remember the old Pennzoil deal. Again, there was a cartoon back in, the 80s when Pennzoil was going through some legal troubles, and there was big lawsuits going on. And they showed a diagram of the plaintiff and the defendant, and of course, all the money went to the class action, to the lawyers. And again, I think that obviously that's one of the problems in this country, tied in with the insurance companies and the industries that we run. It's amazing how phony, and I can't say crooked, but for lack of better words, these insurance companies, you have to get all your drugs and everything approved, right? And of course, those are so ridiculous. You can go across the border and buy the same drug for 10% of the price. You don't even need your insurance. But when you're in this country, you got to overpay for it. But it's amazing how you have a drug that works and it's making you healthier, and you get it from one insurance company, approves it, and then they go to a new insurance company, either changing employment, whatever, changing policies, and they don't approve it. Explain to me how that is possible. Explain to me what are they thinking about when you have a drug or a medicine that is working, okay, and you switch companies and they won't approve that drug. Explain to me the logic behind that, and obviously we know what's behind it. It's money, okay. It's always money, all right. It's the greed and the grubbers trying to get the last dollar, which is, again, whether you like President Trump or not, which is why most in the swamp, or none in the swamp, including those in his own party who may not admit to it, don't like him, because he does not participate in the swamp law, the swamp rules, because he is, again, I'm sure I get a billion emails about this as usual, but he is not there trying to scam out the cash, okay? Whereas many of the lobbyists and the politicians who want to make these bad deals are, okay? It's as simple as that. You can argue with it all you want. You just look at it in black and white. But of course, we, as many lazy Americans, say, well, that's the way we've always done it. So let's let it continue to go, and we don't have to worry about it anymore. But of course, you do have to worry about it, because eventually it comes back down to affect you. So the only moral system is to be capitalist and to let the free markets work, which we have a great deal of trouble allowing that to happen. Okay, we know what AOC doesn't want the free markets to work. Okay, we know that a lot of the new campaigns for 2020 president don't want the free markets to work. They want to take care of all your money for you. And God, wouldn't that just be a special bonus to have them take care of my money so that I could be broke like them? Okay, isn't that great? That you can have them take and throw your money in a garbage can. And but of course, don't think it would affect the way that they live. Of course, I mean, we know that AOC showed a video where they're chowing down on some Whole Foods chips or whatever it was in her apartment. that has no furniture but a chair or whatever, of course, she's making a cool $180,000 a year, and she'll have a nice big pension when she's done. So let's not worry about the facade of what these animals are telling us, okay, and what they think about it. Because again, both sides of the aisle, they all make a lot of money, and they all make it on the sweat of our back through the system, which needs to be well adjusted and is not. But that's at the end of the day what we got, and that's what we're going to have to deal with. It is why you have to continue to get out there and vote, okay? Now, again, we got earnings season beginning this week with the big banks coming out. And again, we know that there's lowered expectations. So, of course, the bar is lowered, so it's easier to beat the bar. But I got to wonder, okay? You know, again, I always like to wonder why we hear certain things from certain people. And, you know, I've said this in the past, and I still believe it. I believe that the banks are over-leveraged. Okay. Now, I have no idea what the earnings are going to be. I'm sure they'll beat expectations because, of course, right now, the equity markets want to continue to go higher. So I'm sure that they'll beat expectations. But again, I always wonder, okay, about, you know, the stress test and all these things that we hear about how strong the banks are. Yet, again, I go back to about 6 weeks or 8 weeks or 10 weeks ago when Steve Mnuchin came out and said that the banks are fine and in good shape. And I go back to some of the other statements we're trying to hear. And then I weigh that against why, if the economy is so good, our interest rates not going higher. Okay, I mean, that's typically a sign of a strong economy. We keep hearing about the lack of inflation, which is why there's no reason to raise. They're trying to inflate it. Haven't we learned our lesson about inflating asset prices through artificial means and seen the collapse and devastation it then causes? Have we not watched the destruction of the dollar for 106 years? Okay, so again, it makes me wonder when private and second and third tier lending institutions are busier than they ever have been, lending money at higher rates than are on the street, because of course you can't, unless you're pristine and you're doing a big stock buyback, you can't get money. So you have to go to a third party to pay 6% for a 4% loan. Okay. And of course, then that bank in its ever great wisdom, okay, will buy that loan from the person who sold it and put it in their books, and of course create these CDOs and create all these other things of bad debt that they didn't want to take themselves, to make less, to then let everybody go bust and pay off everybody else. It's like the same instant replay we're going to see. But we'll get back to that and more after the break. This is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with more after the break. Hey, all. What's up? You know, I just did last week, I did a great webinar on hedging. And, of course, we're going to do one more class this year before the fall. If you'd like to learn how to hedge and you want to see what it's all about, just shoot me an email at bubba@bubbatrading.com. I'll send you the webinar that I did. It was about 90 minutes and explains how the hedging program works and how it becomes basically a mathematical certainty. Because, again, when we're hedging, we're not using an opinion trying to pick. We're trying to protect and continue to grow. And we also talk about how you can create artificial stock. So if you're behind in your 401k or your IRA and you want to build up your retirement and you have less capital, we teach you how to leverage up without taking the same exposure you would normally. Free webinar. Just go ahead and email me at bubba@bubbatrading.com. And, of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz. And, of course, we left off talking about the banks. And, you know, again, I find it always funny that we're willing to bail them out at any cost. For what reason, I don't know. But, again, this goes back to what I think is a broken down system, which was designed to destruct the middle class. But meantime, equities continue to roll. Okay, here we are. You're gonna see new all-time highs, possibly this week. Okay, you know we're not going to get this close. Okay, and not print them. Okay, now whether they continue to go through it, that I can't say it. Okay, as I've said, and we've continued to be long since the beginning of the year, since the Christmas Day massacre, We have been buyers. We have been holding. We have been buying each and every week, okay, and continue to stay long. Again, there's no reason. I have no reason, okay, to believe that the sell is going to start. And I don't want to be first in line. You know, there are times when we were sellers of rallies. For now, you have to be buyers of dips until it changes. We've said this each and every week since, you know, I don't know, 14 or 15 or 16 weeks now. And we will continue to tell you that you can't short it here, okay? You can watch and sit on the sidelines, or you can buy, but trying to short here and say that it's over, you have declining volume, which is hard to deal with. Volatility is getting crushed. And I think what interesting thing to note, okay, if you take a look at, if you trade options at all, and you look at the SPY calls, okay, same calls 1 week out, dollar for dollar, are 60% cheaper today than they were 3 weeks ago. The same exact setup and scenario, not the time decay. Going from week to week, they have dropped in price. Actually, they're 60% of the value. They've dropped 40% in price in the last 3 weeks, going week to week. What does that tell you? A lot of complacency out there. But again, we can't tell you that the markets can't continue to go higher, because right now they're going higher. I think it's interesting that the NASDAQ is still by far the strongest. But interesting enough, its tandem partner in a solid market, the Russell, has been the weakest of the group. It's kind of befuddling when you look at it, because those are the two indexes that, when there's the risk on trade, are usually running. So there's a lot of things going on here, but in the meantime, I would say we're going to see a print of the new highs. I don't see any way around it. And look, quite frankly, I'm long through my IRA and through my IRA and my 401k anyways. So I'm certainly not unhappy about it. It's just, I'd like to see some trading action. I'd like to see two-way trade, we call it, where you can see buyers and sellers. You can get, markets go up, the markets go down, and you can scalp in between those ranges. In the meantime, we see gold tried to break down to 1280 this week. Got to 1284 before coming back again. I think we're 1280 to 1320, and I don't think that we're going back up until we can hit the 1280 level. Okay, so again, I think you're in this range. I think it churns for a while, and I think that's what you're looking for. Now, if we do break above 1320, we'll have to reevaluate it. You look at the bond markets; the bonds did get blitzed a little bit finally. Okay, and I think they're headed lower, because I do think, no matter what the Fed says they're going to do, I think that the fixed income traders, and again, let me remind you that the fixed income market is the biggest market in the world. And of course, there is now talk of negative rates, which does nobody any good. It certainly tortures and penalizes the savers, and it really benefits the borrowers. Okay, and it benefits the companies that want to buy back their stock. And I have no issue with stock buybacks, but I do have an issue when you're letting the system run the way it is and trying to manipulate it out, which again, we'll get more into that in my commentary a little bit later. But in the meantime, bonds did take some beatings this week and are under some pressure. Now again, interest rates are much lower, but you do see the yield curves inverting. Okay, I said this on CNBC on Thursday night, and I will say it here. I think that we're right in the beginning of a recession. And again, just because we might be going into a recession, which I do think we are, I don't think that changes that the stock market's going to go down immediately. Again, we were starting a recession in every recession before this one that had trouble in the markets. The recession started long before the market started to break. Okay, so again, that doesn't mean that the markets are going down right now. Right now, you have to remember there's only one place to go with your money if you want any return. So they're still forcing out, to me, this market, this rally looks like a retail rally. It doesn't look like the real pros are participating, because there's no volume. All right, volume it goes down every week. So now we got oil, and of course we mentioned this at the top of the show. There's action in Libya right now, a little bit of a coup, and I think that'll be put down if it hasn't been put down already. But that has forced oil into what we call a backwardation formation, which means that today's oil is more expensive than tomorrow's oil. Okay, it's supposed to be the other way around, right? Farther out in time. In the meantime, that is now inverted again, as it did last time it reached up to these levels, which was the last time it brought us back down to the 42 level. Now, again, we're not looking for 42 tomorrow, but we're looking to identify that actually we have now seen the top, okay? And once we can identify that, then we'll look for a spot to sell. Right now, we're still watching and looking, but now getting closer to wanting to jump back in. If you remember, we looked at 60 and we broke through. We're now at 63. So let's see how they trade from here. Grains had a decent week after last week's USDA magical mystery tour of finding more land and more acreage. But in the meantime, grains, although a little bit soft on Friday, had a solid week and are coming off the bottoms. We think there's a good chance for a big market. Again, there's things that we would need to see, maybe some weather events. But again, it will not be because the dollar is too strong that we will not see a big market. I think the dollar has nothing to do. Yes, they are dollar denominated, but from a money standpoint, and in this case, the dollar is not what is holding down the price of grains. What's holding down the price of grains is the well oversupply and the lack of demand, because in 3 to 4 years, we have not had an event that has created a shortage. So what we've seen is a continuation of building up supplies, and then you've got competition, and you got this other stuff going on. But in the meantime, it'll all work its way out, and before you know it, you'll get one event. The hedge funds will get squeezed. You'll get a short covering rally, and I think then we'll be off to the races. The meats look very solid and continue to hold those levels. Yeah, they were a little lower on Friday, but again, markets don't go. You don't want markets to go straight up or straight down. Okay, the faster they move in one direction, okay, the more likely they are to reverse and go to the other direction. So you have this slow grinding trend, especially in live cattle. Okay, feeder cattle is still just in a big consolidation pattern. And hogs have gone, parabolic because, of course, we're talking about the African swine flu. And I go, okay, the markets are pretty much priced in, and I think we've seen that. Okay, I don't think it's going to go much, much higher than here. We're very bullish. But again, we've gone straight. We went up 42% from the bottom, sold back about 10, rallied back to the top end. I would expect this to be wild churn almost on every bit, a little bit of information on the flu, but really it's not the flu. Okay. We go back to the PED ratio. Certain things, you get to a price where it becomes unsustainable. Okay, as they say in the business, high prices cure high prices, and low prices cure low prices. And of course, we've seen the crypto world. Okay, as we've stated on the show. Okay, when it was at 3,600, when it was 4,000, it's holding nice levels and continue to try to move higher. So again, we look for higher prices in the crypto world. We look for them to continue to work. Now, again, I'm not looking for 20,000 tomorrow, but I think you're going to see that as more people get involved and as more people try to badmouth it, we start to see the opportunities are starting to come there, because they're going to be real. They're going to be in the markets. They're going to be freely traded, as much as freely traded can be, but we're going to see a lot of things. And I think one of the big things that I noticed this week was I heard Larry Kudlow, great guy, smart guy, been around for a long time, CNBC, works for Trump, worked with Reagan, but he called this a new era, and this time is different. And of course, we know that it's never different. And I find that kind of disturbing, just from that standpoint, because we know the China deal is going to work out. We've said it all along. You can see it's getting much closer now. And I think the only thing that's preventing China right now from having a deal in writing or in a handshake is both leaders are trying to figure out a way to come out arm in arm saying, success, we did it. Okay, so we'll see what happens there. In the meantime, we'll see what this week brings. Earnings start. I see no reason to believe that markets will not continue to drift higher. We have the dull market rally. It's continuing. You've got the championship game tomorrow for the NCAAs. The game is basically a picket. Virginia 1-point favorite. I don't know. It looks like it's kind of Virginia's year, but Texas Tech is awfully good. We'll step out here for break, and we'll be back with my commentary after the break. This is Bubba's Bottom Line. Todd Horwitz. We'll be right back. So everybody, again, I'm going to offer you my hedging webinar. If you'd like to check it out, it's free. So again, you want to learn, get some tips and tricks on how to protect your assets, protect your worth. All you have to do is email me at bubba@bubbatrading.com, and I'll be more than happy to send it to you for free. Again, there's no obligation. I'm not going to hound you. Look, one thing I can tell you for sure, the people that want to sign up, they sign up because they want to. I'm not going to sell you. I'm just going to show you and share with you the idea. Okay? If it's for you, great. If it's not, hey, you got something to listen to anyways. In the meantime, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. It is Todd Bubba Horwitz, and of course, each and every week I give you an opinion piece of what I'm thinking. And I'll tell you something. I am very frustrated with what's going on with the Federal Reserve. I am very frustrated with the White House, the way that they're trying to pressure and try to make it into a partisan organization. Why don't we work on abolishing the Fed? Why don't we worry about ending the Fed? Because let's be quite frank. Now, we know we've had this conversation before. We know that we don't have the true free markets that we think we have. There's a lot of manipulation that goes on. There's a lot of things that go on. But what would be so tragic about letting interest rate markets price themselves? Because they do, at the end of the day, they will end up pricing themselves, which is why the Fed always blows it. But why, if the economy is so great, why is the White House so much pressuring the Fed? Why is the Fed standing pat? And I know we're going to hear there's no inflation, okay? But we're starting to see wage inflation, which is a good inflation. But the cost of goods and services, the costs that you use every day are going higher. But yet we have no inflation. Of course, I've never gotten that. And of course, the people, as the interest rate markets fall, savers continue to get tortured, which makes the small amount of inflation they say we might have even more torturous. But again, I'd like to see the end of the Fed. That would be the perfect scenario, would be end the Fed, because there is no need for them, okay? All they've managed to do is destroy the dollar, destroy a big portion of the middle class, and destroy markets instead of letting free markets trade. I don't understand why a group of 12 academia people that have no clue of what happens in the real world should be deciding what interest rate policy should be, okay? Again, it goes back to, if you let the markets trade free, the supply and demand model will tell you if there's a big demand for money, that means that interest rates are going to go higher. If there's not a demand for money, interest rates are going to be lower because you're trying to attract it. So it's no different than any other market. So again, versus worrying about the White House trying to muscle the Fed, worrying about getting, and I like Herman Cain and Steve Moore, but worry about getting your own people to become a partisan, because the last thing we want is a partisan Fed, because again, partisanship changes and all of a sudden it goes from one to the other, and all of a sudden you'll see $93 trillion printed for the Green New Deal, which is the last thing we need. We've got too much debt, we've got too much problems, and until we get something, the Federal Reserve, who says enough and quits saying we'll continue to print money, and let's what the chips fall where they may, so that we can clean out the system, it's going to be a problem. So the best solution for the Fed is to end it. And of course, that'll end today's version of Bubba's Bottom Line. As always, I thank you so much for being a part of the show. And of course, we will give you our pick tomorrow for the championship game on Bubba's Daily Update tomorrow. Have a great rest of your Sunday. Bubba's Bottom Line. We'll see you next week with more Bubba's Bottom Line.